Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to the Share Talk interview, and today it's with Richard Poulden, who's chairman at PCG Entertainment. How are you today, Richard?
Very good. Good to talk to you, Zach.
Right, we haven't spoken for quite some time. I take it there have been lots of exciting developments at your company since then.
I wish that there were that many exciting developments. We have some exciting developments now, but sadly, we had over a year taken up with the employment tribunal from the former CEO who we dismissed. And I would have to say, I think there is a role for employment tribunals in business, where people are pregnant women are fired and so on. But I don't really think that employment tribunals should come into play for CEOs of early stage businesses.
Right, so you feel it's a bit, it's not capitalistic enough, let's say.
I would say it isn't capitalistic enough. If you want to be an entrepreneur and start companies, then you have to take risks. And if you fail, then you should not be rewarded for failure.
Okay, all right. And so where are we now then in terms of all that?
Well, where we are is, of course, as I said in the chairman's statement, we did get very close to doing a deal last year, but that fell to pieces because it was in the United States. American investors were involved. And once they knew about the employment tribunal, they just saw the litigation flag and pulled the plug. So at that point, we stopped all deal activity because it would just be, we didn't know at that point when or if the tribunal would be settled. Because if it had run its course, it could have gone on for another couple of years. However, we have announced various things that we've been looking at, but we tread continuously this fine line between wanting to announce everything that we're doing and not actually being supposed to announce anything until it's actually concluded. I would personally much rather live under the US or Australian regulations where we could issue an announcement saying that you and I had had lunch together to discuss the future. And we'd be penalized if we did discuss the future and didn't announce it. But in terms of what we're doing at the moment, again, as I put in the chairman's statement, which people seem to have missed rather, is we have been in discussions for some time now with a Chinese gaming company. Now, this is nothing to do with the previous business that PCG had, CPDC. This is a completely different company, but those discussions are progressing well. And of course, if we do that deal, that will use our gambling license and our media licenses.
Right, so there could be something quite fundamentally strong on the horizon then after that.
I believe so. Now, we've had criticism for not announcing a deal, but unfortunately, the motivations of the long-term shareholders are completely different from the motivations of Flipper the Dolphin, because all Flipper wants to do, as indeed I have been urged to do by Flipper and his friends, is say that we're looking at a cannabis deal, when they don't actually care whether we are or not, on the basis that the shares will go up, they can flog them, and then they'll come back down again. But of course, we can't do that as directors. So that when I invested in the last placing, I can't join Flipper and his friends. That has to be a long-term hold. So my objective is to get a deal that will work in the long term. Flipper, if he still holds shares, will make money, but so will all the long-term holders. And that's really my objective here.
So what would a scenario where shareholder value was extracted look like? I mean, what would that come after a decent deal, and then a few months or years of revenues or profits coming in? What are we looking for here?
Well, I think that I would hope that it'll be substantially re-rated as a company as and when we announce a transaction. But from the rational human being's point of view, that will revolve around, one, the quality of the transaction, two, the dilution on existing shareholders. Those, I'd say, are the fundamental points. I mean, if we just wanted to do a reverse, I'm told that there's an estate agent looking to come to market at the moment, which I suppose has to be another top of the market indicator, if ever there was one.
Yes, of course. Yes. So, and is there? I mean, is it necessarily? I mean, you're, the clue is in the name, presumably an entertainment media company. Is that something that the investors should be focused on?
That's what they should be focused on at the moment. Absolutely, yes.
Right, and the China story is still there.
A portion of the China story is still there. We've again said in announcements that we're in discussions to use the media licenses, and that is to broadcast sports over the internet in China. The media license is one of, I think it's probably the most crucial of the Chinese licenses, because it does enable us to broadcast anything legal over the internet.
Right.
And of course, as we all know, that's how people are by and large watching television, particularly in China, which has leapfrogged the rest of the world in that regard.
And what type of, I mean, size business would this be once, this was all, going ahead and going at full throttle? Because obviously China is a big market.
Yes, and people are tremendously fond of saying, well, there are 50 billion people in China. If I only get 0.5% of that, it's a success. But we're still working on what the market size of something like this would be. If we look overall at the games and gambling business, which again I said in the chairman's statement we were working on, that should be substantially larger than the old CBDC business.
Right, and so. I mean,
I'm trying to think of the nomad listening to this in the background.
Okay, right, okay, that's fair enough. I mean, obviously this is like you've got a £1 million company here. It's been through the mill, let's say, over the last the recent months and years. Do you think that this is a turning point that we're at now?
Definitely, I do. Otherwise, I wouldn't be doing it. And one of the things I said at UK Investor Show was that I put up a share price graph and pointed out to people that if you looked at the bottom of that graph, we hadn't been vilified as much by the BBMs since the bottom of that particular graph, where they were all out for our blood, my blood in particular, as they are now. And the graph I put up, of course, was Serious Minerals. So there's hope, I think, in a counter view. And certainly my objective is to turn this into a company that makes money for everybody.
Right. So I mean, it seems that the secret in this area of the market, the small cap area or the growth company area, is it's all about the deal. It's all about the deals.
Well, I believe it is, because I think doing a bad deal will maybe give a rise in the share price in the short term, or announcing a fake deal will give a rise in the share price in the short term. But there's no long-term value, and there's no long-term gain for the people that have held, as I have, since before flotation, actually.
So in a way, it's better to look at the company rather than the share price at this point.
I think so. I think the share price is a red herring, because PCG is traded, to a certain extent, a lot of it is traded on rumor. We've had Twitter comments where people have said they've spoken to me that morning when I wasn't anywhere near a telephone, and they're assured that a deal is happening in the afternoon. But there seems very little interest on AIM's part in following any of that up.
Okay, well, we'll see what happens. Hopefully things will turn around both in share price terms, and obviously as far as the fundamentals of the company are concerned with the deals. Richard Poulden, Chairman at PCG Entertainment, thank you very much indeed.
Thank you, Zach. Much appreciated. All the best.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.